In Chapter 4, with Iqbal Khan of Credit Suisse, we'll discuss using networks to bring investment ideas to life. Iqbal, how do clients use these networks in a practical way to bring investment ideas to life?
Up to now, we've shown our clients about 12 deals related to this program, 8 of which are proprietary deals that Credit Suisse brought to the clients, and actually 4 of them came from the network of clients that are participating in this program themselves.
But we have a time at the moment, Iqbal, where the markets are particularly affected by our times of geopolitical uncertainty and the events that are happening on a weekly or daily basis. Can the network react to these events?
So if you think about the example of direct equity partners, that is a long-term investment. That is an investment in value at the end of the day. If you think about low interest rates, negative interest rates, and you're looking for yield, you will ultimately look at private equity, real estate, infrastructure investments, and that's exactly what at the end of the day direct equity partners is bringing to you as a client. Now, I also refer to Strategic Investments Group as another program, very similar to direct equity partners, but if you think about this way, direct equity partners brings you equity investment. Strategic Investment Group brings you equity-like debt. What do I mean? It actually provides you, for example, with convertible debt investments, which give you yield today and participation in equity over time. So you do have these 2 programs that work very well together. In both programs, similarly set up, we provide our expertise, we do the due diligence of the investment ideas, we onboard the client and show proprietary deal flow, but also, more importantly, our interests are aligned with the client. We co-invest with the client.
And for direct equity partners, what would a success story look like?
At the end of the day, success is something very subjective. In my view, it will come down to seeing the deal flow that you would expect to see within this program. I think that is number one. It is not really worthwhile signing up to a program if you do not see the deal flow that you're expecting. Since inception, we've actually been able to show 12 investment ideas, 8 of which were proprietary deals from Credit Suisse. 4 came actually from the network. So I would think that that's pretty successful. You've seen deal flow that is relevant. You've actually created deal flow within the group. So the benefit is almost two-way, if you like. You've actually been able to raise financing and at the same time invest at the same time alongside the bank. So I think that's one element of success. And then ultimately, the return matters. And at this point in time, we're looking at an investment return of above 15% on these investments.
And might some cynical voices be correct in them saying, well, this is just an opportunity to get the investment bank involved in the process?
So this is not a flow provider through the investment bank. This is not what we're looking to do. That's why I made the point that we showed 12 investments to clients, of which 8 were proprietary deal flow from Credit Suisse. And mind you, that they didn't all come from the investment bank. I think this is very important. We live open architecture within Credit Suisse. It is something that is very important to us because we think that we act as the fiduciary agent of our clients. We're servicing the client to protect and preserve wealth, but also enhance wealth at the end of the day. So this is not, for me, an internalization tool or framework. It is open architecture, but our job at the end of the day with clients that have signed up to the program is to show them deal flow, which comes from within the bank, from outside of the bank, and can actually come from the participating members of the program.